Good morning, everybody. Welcome to Orb Plus. We is I'm surprised on two counts. So first up, we have consistent move up. Right? We see this here. This is surprising to us. Why is this surprising? Because yesterday we took a trade right here, thinking it was going to continue lower. Trend said it would go lower. Everything about the higher ups said it would go lower. Our trade idea in general was wrong. Though it was right. Like when we entered this on the 1 minute, it was right. It was good. It was right. Until we saw this move up and it stopped us out. Yesterday, all of this, we would not have been able to trade at all because news. That's why you didn't see a video out except for after I made the VOD from stream yesterday. I hope you guys enjoyed that, by the way. I had a lot of fun. It was okay. On to today, though. I'm surprised because I actually got some sleep. It felt like I didn't fall asleep until about 4ish, and I woke up like an hour late, but still in time for a trade, to say the least, which is good. I mean, we're here. We got it. We made it. So, and am I awake? Yeah, kinda. Kinda. I'm gonna hop on Trade Locker right quick. I'm gonna erase everything off this chart because I know it's messy. Boom. Good. So I've learned a couple things about taking trades and our stop losses as well as our take profits and our highs and lows being marked and making sure that our risk is being managed properly. So far, it's been okay. However, I've made a couple mistakes, and the first real mistake was ooh, look at that. We hit a key level up here. We have an hour before we're looking for market open and trades to be a thing. We're also looking for highs to be made off of this, so we're waiting patiently for that. But before I get into it, um, we're looking specifically for, whoa, that's a change. That's high impact news. It was just red unemployment claims, but that's Trump speaks. That's brand spanking new. GBP galore, Euro holiday. Now two USD folders. And next up is one FOMC orange folder for Friday. We can try and take a trade Friday. I'm aware that's a bad idea. The goal is to make back what we lost Tuesday. Because this sucks to look at. This really sucks to look at. So, that being the case, let's dial it back to what I've learned. Take profits and stop losses should be put on and managed on the time frame specific that we enter trade. So let's say, for instance, because the confluences are universal, you can use them on any time frame to determine where price is going to go. So on the 5-minute specifically, the session highs and lows don't change, though we can take a trade off of what we think 5 minutes is going to do, and then of course understand that the higher time frame is going to hold higher power. So if the higher time frame says, let's just go up to the hour, right? If the higher time frame says we're going to continue higher, fair value gap, fair value gap, fair value gap, continue higher, everything's screaming in this whole lineup, price is going to push much higher. There's nothing stopping it. There's nothing moving. There's just price moving up, which is good for us. I mean, we're sweeping highs. We're sweeping liquidity here and here. Our next target should be there. And if on the 5-minute, like I was saying a second ago, this is what we're wanting to do, we should be looking for this high right here next to get pushed past. This one right here. It makes the most sense. We're actually clearing highs. Let's go ahead and mark this just because. Let's mark this one too. Get it good in there. I don't think I want to mark any other ones because that is a huge amount to mark. Yeah. Looks like that one's like right in line with that. It is. Dang. Okay. So we don't want to mark that because it was cleared. But we do want to mark this because it's in line with that one. So, on the 5-minute, we'd be looking for the highs, like outside of this one and like the most recent high, which would be this one here, to clear and to take profit from. That, if we were entered on the 5-minute, would be our goal, to look at these highs and go, okay, this is where we want to go with it, right? Because on the hourly, you got to think it covers a much broader scope, right? We can go all the way up here. We can go all the way up there with our hourly time frame. But if we were to enter off of this time frame specifically, it would take literal hours for us to go from point A to point B and to actually take a profit off of anything. The move would have to be so great on a smaller time frame that it doesn't even matter, because if we were to enter off the hourly, again, it would take hours, potentially days even, because you got to look at this as well. We have a huge, like I say huge problem with high time frame confluence being literally all over the place. And if they're not all over the place, it is consolidation all the way through. And then of course you have the random, and at best, again, back to all over the place stuff here. It would take hours for us to see a genuine movement in the one direction we want it to go in. Our goal, our job is to trade within trend, which means we take the information given to us off a higher time frame and we put it on a lower time frame to see exactly if, one, price is going to go in that direction, and two, whether or not the idea is correct. Plain and simple. So we are using the higher time frame as confluences that, one, we're in a trend, and two, trend is going to continue because they hold the higher power. Once we've confirmed and noted that, we move to the lower time frame to see and build our building blocks to actually take a trade on. And then after which we watch as price is either good enough to validate our idea or bad enough to invalidate it. I understood the concept of take profit and stop loss. I just didn't know where to set them. So what exactly, like, what exactly am I meaning by this? I mean, go to the 5-minute, right? And let's say I want to take a trade in this somewhere, or on the on this right here specifically, um, we look for our confluences saying, yes, price is either going to continue down or it's going to continue up. Well, we know that on the 5 minute specifically, we'd be looking for a break of structure, inverse value gap off of a key level hit, right? Once the key level is hit and we have one of the two, we'd be looking for, literally woke up like 2 seconds ago, so don't mind me. But we'd look for the two of those to confirm key level has been hit and the reversal is happening. And then secondly, we go for fair value gap, breaker block, equilibrium, or order block to determine where price is going to go after. Continuation in that direction. How far in that direction until we see a break of structure and inverse value gap on the 1 minute to determine price has broken out of the current move and is continuing higher per the higher time frame. Yeah. Remove. I honestly can't wait for this trade. I'm excited because I have learned a little bit and I now know how to apply what I have learned. We don't care about the highs off of Asian session because they've already been passed on the London. We do care about the low on Asian session though, so we're going to keep that marked and well aware of. I'm hungry. I'm going to have my breakfast real quick. I will be right back. Okay, so something I want to note. We have this leg up. This is current price action over here, right? Something I'm looking at on the daily is a breaker block, this small one right here. Order block, sweep of liquidity on these lows over here, and price continuing lower, right? The current price action is just high enough to fill this breaker block. A disrespected breaker block means no more sign of continuation. Instead, reversal. That something down here happened. It swept, which makes sense. I mean, well, it makes sense in the context of get rid of these gaps. This is the NASDAQ we're looking at. Because it was filled, price is above the breaker block now. We know price is going to continue higher off of the daily. The hourly is a little bit harder to read because you got this right here, and this right here, and that right there is screaming liquidity sweep because that high is dang near equal to this one here. If these two are liquidity sweeps, we're looking for a break of structure on the hourly, which means we'll see a low close below this one here. When it does, that's when we'll look at that there to look at. Does that make sense? Makes sense to me, kinda. It kind of makes sense. We got a bunch of fair value gaps in this saying price is going to continue higher. So having a break of structure doesn't necessarily mean price is just going to drop and continue lower. Though we have draws on liquidity lower than what we see all throughout, like this hourly, right? We want to see and get confirmation. We want to see and get confirmation at the same time that price is not just going to continue higher after breaking structure. It's actually going to continue lower. We want to see it continue lower after closing below one low and then, of course, inverting all these fair value gaps and then coming after this liquidity here. That's what we want to see. Seems we have a breaker block here. Failed retrace to continue lower. From that, price went much higher. Respected fair value gap. Respected fair value gaps so far. We have an inverse fair value gap after hitting this high here. This looks like a liquidity sweep because we had a high here made and then we hit it a second time. From there, we would have looked for on the 5-minute a break of structure, which we did get here. About to get here. On this candle, it's got to close below this low here. That'll be a valid break of structure. After which, we're looking for a fair value gap off of this fair value gap, breaker block, order block, or equilibrium off of this break here. Once that occurs and we see price continuing to move on down, we're looking for the 1-minute confluence of a break of structure or an inverse fair value gap. It says price is going to continue on down. This allows us to catch midway an entry and then watch it continue on plummeting. That's what we want it to do. And we have to remember, I have got to remember, past couple of days we've been in an uptrend. Generally speaking, we've been in an uptrend. It's only recently that we've seen a retrace. And this retrace, I can't tell if it's a failed retrace or not. I imagine it is because we had a low created and it wasn't lower than this one. So off of this mini retrace downtrend here, we definitely broke out of it with a failed retrace. So breaker block, sign of continuation, price is continuing higher. From that breaker block, we're looking for confirmation. That'd be, again, a breaker structure or an inverse value gap. So we're looking for price to continue higher and break past this high. That's what we're looking for. If not, it'll be a collective within this candle and this candle here. It'll be a collective breaker block between these 5 candles. And then the result will be an order block that sweeps this. It'll cause a liquidity sweep on the downside and then force price lower due to the reversal sign here. I'm getting better at this. It's clicking. Every now and then it's clicking. I see sparkle on the horizon. Anyway, we got a closure below. That's cool. Now we're looking for a fair value gap. I see a fair value gap right here. Though it's not below this one. We want to see it close and then provide us a fair value gap as a sign of continuation. I don't understand how to use that. So order blocks cause liquidity sweeps, right? So if that's the case, this whole move is an order block. This is our breaker block. It's a failed retrace to continue lower. We can see that because it didn't break past this. Price then broke past this. Not on the breaker block, but on the order block. We had an order block and it swept liquidity here, right? So there's a slight problem though, because breaker blocks are signs of continuation due to an imbalance. Right? That imbalance is the reason why price is continuing in its direction. So the question becomes, my question would be, if we identify successfully a breaker block, right? The rule is it can't have a wick if it's a candle down, right? If it's a move down and it's identified as a breaker block. Price can't have a wick lower than the wick of the breaker block identified. Understand? Because that would mean market is balanced. It is no longer an imbalance because fair value gaps, right? Think of it like a fair value gap. If the wick is below it on a move down, that would mean it's been cleared, it's been balanced, making the breaker block invalid, though the order block is confirmed and is a sign of continuation that price continues higher, which it does. I mean, it does look like price continued higher because we got our liquidity sweep on this high here. Or am I looking at this wrong? I think I'm looking at this wrong because it's the order block that causes this. So it's this move down, that's the order block. So a sweep of liquidity off of that there. And then these two would be our breaker block. Failed retrace down, doesn't close below that. We have our move up in response to this move down. We create a high. Price doesn't move above that high until we sweep the liquidity on the downside due to our order block. And then from there, price continues higher, sweeps that liquidity there. We then see this here move down, break structure on this, and now we're looking at a new move because we had a reversal. We had a double reversal. We had this one here first in a smaller time frame. And then on the larger time frame, we swept this liquidity this high here, which means sign reversal. And we got a break of structure that confirmed that this reversal happened. And now we're waiting on the fair value gap on down. Okay. I think I just answered myself. I think I did. I think I did. I think I did. I think we're good. I think I'm good. I might be good. Might be. I don't know. I think I'm good right now. However, we have to make certain of something. From a higher time frame, we have not broke structure yet. Higher time frames hold higher power. On the higher time frame, specifically, we have a fair value gap right here. Boom. And that is within equilibrium. The most recent high, boom, and the most recent low, boom. Okay. Price is within equilibrium for the hour. With that being the case, that's our sign of continuation. Price is continuing down without providing us a fair value gap, breaker block, or order block. Though we did get a break of structure on the 5-minute, though it didn't provide us with anything else. That would be our equilibrium that we're looking for. From here, we'd be going to the 1-minute on all of it to determine the best course of action, which would be a breaker structure back to the upside or an inverse for value gap. That is to allow us to enter. That's our trigger to enter. We'd be looking for that. Wait for it to go up, break structure back to the downside, enter, let it continue on. we'd be pressing sell on this to get price to go lower. However, however, there is a problem. There is a thing. There is something that we need to make something perfectly aware of. It is not 8 o'clock, which means we have to wait now. Which means we're going to wait. I'm going to pause the video and be right back. We're going to wait, though, until price presents us an opportunity to enter. Patiently. I'm going to wait. BRB. Alright, it is now 8 a.m. We are currently working with the respected fair value gap on the NASDAQ and on this as well. We had a bit of an SMT divergence. I don't know if you guys saw or not, because this right here is a thing. So, do we have SMT divergence actually? We did. So, NASDAQ created a lower high while the... Oh, no. I'm sorry. It's like minor, very, very minor looking, the differences it made. My mistake. What the heck? Why are they yellow? Weird. First time I've seen a yellow one. Anyway. Yeah, that was weird. False alarm, I guess? I don't know. Because I'm looking at this right here, right? I was looking at this, but now I'm looking at this. It created a new low. And sure, it pushed past, swept this low. Same story here. Except we had an SMT divergence where it did not create a new low. It pushed past, swept this low anyway. I'm guessing due to news. That makes the most sense to me. News happened here. And from the sweep, we had order block, rally. Sorry, order block, sweep off the low, and rally. There we go. We had breaker structure on high. That would signify end of downtrend for this here. So this makes sense to go in an uptrend. We do have 1, 2 sweeps of the highs here, 3 of the highs. We're looking for our signs of continuation that price is going to keep moving higher. That would be our fair value gaps that have not been disrespected yet. Although I'm looking at inverse fair value gaps that are in fact something. Okay, so that's the thing. That perfectly, almost perfectly fills that right there. So we have breaker block, it seems, here. Failed retrace up. And this fair value gap here almost perfectly fills this breaker block. It almost perfectly does on the hourly. So now we're looking for... If we were to discount this, treat this for what it is and what it seems to be. It seems to be a liquidity sweep or an inverse of the breaker block. So price doesn't want to continue higher, it wants to continue lower for the higher time frame. Though this is the hourly. This is the time frame in which I'm looking at for the breaker block being filled. So I don't think that would work. Higher time frame wouldn't work on that node because this is the only time frame where there is a breaker block being filled, inverted, saying price is continuing lower. Unlike the daily, that's saying price wants to move higher. Because we had a failed retrace. This would be our breaker block here. So price will continue moving higher until it sweeps this high. We still have a fair value gap here, though it inverts that one there. No, it doesn't. This fair value gap does not invert this one. This is just a fair value gap, nothing more. So this fair value gap specifically is still valid. This is still a valid fair value gap to look at. So that's a thing. And that right there is a valid high to go after on the daily. We have two pieces of high impact news. President Trump speaks and one red unemployment claims folder. So we're looking for reactions off of those specifically. Big green is our high time frame fair value gap. This green is hourly time frame fair value gap. We're looking for this to get respected. We're looking for this to get disrespected. That'll be our mode that price is continuing much higher. That's what we want it to do. Right now, price is within equilibrium. We have a complete hour before that candle closes specifically. I do not feel confident taking this trade just yet. We have news at 8:30 and news at 10:30. I want to wait. I want to wait. I want to look. I want to see. We're going to pause the video. We're going to wait until after 8 has closed and our market has officially opened for a key level to get hit first. And then for our building blocks to fall in place. Once it becomes aware that we have an entry point, I'll unpause the video after entrance, go over what I've discovered, what I did from that point onward. We'll watch chart. And then from there, we will take profit as we see fit. Fingers crossed. We'll be right back. Okay. So we waited a little bit. It is now 8:30 something, 8:40 now. News hit. It was less than forecast, which means it was good for currency. Price has since taken a dump. It has gone lower. Currently, looking at trade locker, let's go ahead and go here. It is lower than this low here. It's lower than this key level. This is a key level hit within our time frame. From here we go to the 5 minute. What we're looking for now, seeing as the key level has been hit, we're looking specifically for did I not mark it on this? Thought I did. Oops. Let's go ahead and mark that now. There we go. We marked that. We're looking for a break of structure, or actually, it is a break of structure, is it not? Our key level was a disrespected fair value gap, which means it was the break of structure slash inverse fair value gap that we needed. So on the 5 minute, we're looking for a fair value gap to form off of the reaction from this to say price is continuing higher. If we get a fair value gap off of the reaction that is going to continue higher, we're looking for it to break structure again or go into an inverse fair value gap temporarily on the 1 minute so we can get the best entry possible and continue higher from there. Key level hit. Break of structure. Inverse for value gap at the same time. We're looking for a breaker block, order block, or equilibrium for price to come down within the two. It would need to go back up, not down. I think this would be our breaker block. we were to treat this candle here as a break of structure, right? Because it did hit our key level. So, boom, break of structure there. Or we would be looking for break of structure afterwards. So it would be this high right here that would need to be cleared. This has been swept, so we don't care about that fair value gap anymore. We're looking for price to continue higher. That's our goal. That's our gist. We have a key level hit. From there, we look forward. Break of structure, inverse fair value gap. If it breaks structure, it's going higher. If it's an inverse fair value gap without break of structure, it'll continue lower. I'm thinking I ought to be open minded to taking trades in the pre market to New York session, which means the ending to London session. So, my thought process is if I'm able to identify all the building blocks, like for instance, let's say this is a key level, on a higher time frame, we identified this right here is almost a sweep because the highs were so close. This would be a bad idea, except we had a divergence happen here. It created almost the exact same high, but it was a lot closer. So, if I can identify the building blocks beforehand, I'm curious what I could do if I took a trade based on London stuff. I understand that's a bad idea considering news, but obviously the precursor to identifying that and taking a trade off of pre-market would be looking at news. If there is nothing major happening, safe. But if there is anything orange or worse happening, don't even try it. Wait till 8 closes and then continue from there. All right, looks like we're about to have ourselves an inverse fair value gap first. Price off the reaction of this move down specifically has created two. It's created one fair value gap on the downside. Boom. I want to treat it as a break of structure because we had this key level here, right? That was broke past. This key level was straight up closed below. And this candle specifically closed below this low and this low, breaking structure of the general uptrend. From here, we can assume that one, there's a fair value gap, sign of continuation, and then from that we go down to the 1 minute, right? And we should be able to identify from this either a break of structure back to the downside, signaling continuation, or B, inverse fair value gap on that time frame specifically, we could just press buy and watch it continue rising. That's what I'm thinking is going to happen. What would be the valid inverse fair value gap for us? It would need to create a low without breaking structure. Technically, it's already done that. It broke past, so, but it wasn't until after that we saw the fair value gap on the 5-minute that said price was going to continue higher. So, in order, we're correct. We have this hit. We have 2 candlesticks up, indicating price is going higher briefly, and then it comes back down, sweeps the low, continues higher. On the 5-minute, it creates a fair value gap in this. We're looking at a retrace back down at the moment. It is an inverse fair value gap. I want to press buy. I'm going to press buy now, because this is an uptrend and we're looking at the reaction off of the news. Take profit, we want it up here. Boom. Modify. Our stop loss, we want... this is difficult to see, so I want something like this right here. This is a terrible trade. I want it at the bottom of this fair value gap specifically. That's good. It's okay to me. I think price is going higher. I think my idea is correct. We're not making the same mistake we did last time. So I think we're okay. For the 5-minute, there is a fair value gap. I need to reset the chart view and actually look at this because I set it there. That's the 1-minute. I'm looking at the 5-minute. Was this a bad idea? Probably. But we are still in an uptrend. Price may have gone down past this, but we did not break structure on the hourly. So price is continuing higher. We have an inverse fair value gap here. Says price isn't going to necessarily continue higher, but without a break of structure, the trend is still within itself. So we're gold. I think that works. It should work. I'm looking where to put my stop loss on Trade Locker because I'm looking at this chart and they're two different ones. I'm looking at the exact same chart, but they are two very different charts completely. I'm looking at for. Can you get out of my way, please? No, I'm not buying anything. You can forget it. May 7th, 2055. Good. Confirm. I want to set my take profit. I set it on this. I set it to 37, 39, 25. Take profit. Set that to 57.40. Good. Okay. We have our take profit. We have our stop loss. Plain and simple. What are we looking for specifically? Well, we entered off the 5-minute. Off a 5-minute inverse fair value gap. Here. We had a fair value gap here. It was inverted. From this inverse, we saw price move down into a lower position, break structure on this, and continue higher. We entered on the leg down from this, considering a rebound back into equilibrium before it continues higher. That is currently what we're looking at. We entered on the 5-minute, recognizing price would continue higher off of a break of structure over here for the 1-minute. So we're waiting for it to continue much higher. Live price action is saying price is going lower at the moment, but it is still a retrace, nor has it broke structure. And so we're waiting. Oh, so patiently, we are waiting. We're going to pause video. I'm going to pause video now. I'm going to wait patiently for price to go our way. We're going to be very attentive to what price has to do in the lower regions of this trade because we are far from our take profit. And yeah. With that being said, we'll be right back. When we return, we should have our setup good to go for this. It should be well above this by the time we get back. So, BRB. So, interesting stuff. I think our trade idea was completely wrong. I'm looking at price continuing higher on the 5-minute on Trade Locker, and I'm also looking at it going lower on the Trading View app. So, and the Trading View app is 2 candlesticks behind. Big oof. We broke structure of this uptrend here, so we are in a downtrend now. If we just same gist here, we broke structure on that. Fair value gap, same price is going lower. So we misread that completely. We misread market. Do I think price could reverse? Yeah, it could. It could continue much higher. Because we still have a fair value gap here that's been respected. Stop loss is set to right here though. Because this fair value gap has been respected. That could be what it's targeting, is just that fair value gap. Both of them, respectively. Do we want to change our stop loss and attempt to wait out this? Give ourselves a little bit more time. I want to. I think I already have. Yeah, I already have on that. This makes our trade much worse. How much worse? That much worse. Like, real bad worse. Very, very bad. We have an inverse fair value gap, though, on this downtrend on the 5-minute. And price has gone higher. Well, it's gone up to this point, but it's gone down since. For the weekly, we are in a down. This says price will continue higher, though. So, what was my idea? What was my... Hang on. Didn't realize how much racket everyone else could make, but I couldn't. Go ahead and just back this out right quick. So, what was my idea going into this? From the hour, we saw our key level get hit here, our fair value gap. It was closed below. Cool, no biggie. We knew that this would continue price downwards, and we thought, based on the 30-minute, because we had the fair value gap closed below, right? But the structure had not been broken just yet, right? Because right up until this candle here, we didn't break structure, right? We thought that price would continue higher even after disrespecting the fair value gap. Clearly, that was dumb move of me. That should not have been a question. An inverse fair value gap is legit the sign of continuation that price is going the opposite direction. That this high had been swept, or was a sweep of liquidity, and at that point, price would reverse on down. That was my mistake. Because we thought this right here would not cross this low here, right? We thought price would continue higher, so we entered on a buy position here. We went down to the 5-minute more accurately. Let's go ahead and just hit that, because we had our key level hit here, right? We had fair value gap, boom. Let's go ahead and do this so we can see ourselves. We had key level hit in this. This was our fair value gap zone, right? From here, we continue onward to find our equilibrium. We determined that this right here is the fair value gap zone. It is within equilibrium. So we take that as a mode of confluence continuation. Up until, again, this point here, the fair value gap on the 5-minute had been respected. So, and this was a news candle. On news, we broke past the fair value gap, inverting it. Our thought process is, okay, the reaction will be strong enough from news to continue higher. Well, we made 2 mistakes. At first, we didn't wait for the break of structure that said price would continue higher. And the second, we didn't get an inverse fair value gap that would also indicate price would continue higher. Instead, we went all the way up to this, found a fair value gap saying, yep, that looks like price is going to continue higher. Definitely. But we did not take into account this fair value gap here. We didn't. We straight up ignored this because we thought it inverted, guess what, these two fair value gaps here. That would have made the most sense. This is what makes sense right now to me. The idea is that this is the inverse fair value gap to a prior move. So the thought process was, from this fair value gap onward, we'd have a fair value gap invert this one specifically and continue higher. We were wrong on that part. We were wrong on that notion. Mistake on our part. Definitely. I'm now seeing that price is just continuing on down. Wow. It's 10. I'm still yawning. Now don't tell me how badly I've messed up my sleep schedule. I don't know what does. Currently, we are that far in the red. Do I think price is going to continue? Nope. No, price would have stopped us out right there. Could we reverse the position? Do we think that would work? Well, what does reversing the position do? Let's find out, shall we? Closing current trade and opening a new one in the opposite direction with the same size. For example, if you're currently long buying a certain number of contracts, reversing the position will automatically sell the same number of contracts, effectively closing the long position and opening a short selling position. So I'd be risking twice as much money to gain half a little bit back. This is not worth it to me because we're almost through the entirety of the trade. So this is legit a no button. Don't even touch that. It's not worth it. If you see that you've lost the trade, accept the loss, de-risk. Don't do it again. Just don't trade again. Current price action says we are going lower. Oh no though. Let's see. We got 12 seconds. We got 12 seconds. I think price is going to continue lower. Just so we're on the same page, I'm looking at this while on the 5-minute. It's currently right at where we stopped this here. This was our this was our stop loss, the original stop loss. We should have never changed it. We simply shouldn't have, because now we're going to lose double what I had initially had put up. I need to stop doing that. I need to stop hoping market will go in my direction and actually read it for what it is, from left to right. When a fair value gap forms, everything beforehand is completely obsolete. It does not matter. It's only what in front of, to the right of, to the future of this move is what matters. I think that was a mistake, was looking at this and going, oh, this is clearly the inverse to something over here, right? And counting this as an inverse for value gap. Though it was, we would have sooner had a clearer picture if we had considered this a normal fair value gap and this a failed retrace to the upside. A breaker block, if you will. This was a valid breaker block as it was a failed retrace to continue higher. From this, we saw price continue moving down. I'm going to close out of this position before I lose any more money, because that bites. Close. We failed today. I failed today. Not fun at all. Was I confident in the trade we took before I took my sweet time in reading this again? Yeah. Maybe I'm too slow. And this is just me being a beginner. I don't know. But I'm too slow to identify specific stuff about market in time in order to get the best out of it. I could have waited all the way up till 10:30, but the biggest problem is we wouldn't have seen a change because of the general trend change. The higher time frame holds higher power. We broke structure on the higher time frame. Setting price is going to continue much lower. So regardless of what we wanted, we would have lost this trade. On the daily, I think it's the same. Well, no. On the daily, it's not. We have yet to break structure on the daily. Am I confident in my ability to even do this? Yeah. Yeah, I am. We went an entire week and made $12,000 off of it. In 1 week, 3 days' time, we made $12,000. $9,000, something like that. I'm confident I can make those trades. I'm confident I can make back the money I lose. I need to grow a confidence. I need to grow a backbone in my confidence to actually make money instead of losing it. I don't want to break even. I want to make money. Today may have been lost, though it was a lesson learned. And from that, I'm moving forward. I want to see something. This is gonna suck, but it's needed. It is a reality that needs to be seen. Here are my videos. These are my documentations, my journals of stuff, right? What in the world happened there? Oh, that was the VOD. Cool. Yesterday. Wow. Got 7 views on that? Crazy. Stuff. This has been the past couple of months now. Let me see. Hmm. No, no. Okay, so I'm looking for the first one I actually made any money on, right? And collectively, I'm trying to sum up a month. Because right now it's May, and I traded in April. And then I traded in March as well, if I'm not mistaken. This was 3 months ago. This was 1 month ago. So this was April that this was posted. April or March that this one right here was posted. We had um, I guess that's what I'm gonna do this weekend. I'm gonna retitle these because I know it wasn't until recently that I started like actually putting the amount I lost in the title and the amount gained or lost in the description. I want to figure out exactly how much I've made in the month or months that I have been trading. So that way I in the end have a baseline goal of keeping track of what I have earned and what I have lost. I don't know if 1 second. I will be right back. Okay, so I think I figured it out. Starting with like very first one, I'm looking for. There we go. 300 here. This was April. So this is in the month of April that we were doing this, right? April there, 2.6K made, right? So let's get out our calculator right quick. Let's look at this for what it is. In the month of April. Okay, so did I manage to I did take a trade on this one. Wow. Okay. This was when I was trying to figure stuff out. $316 on that day. 316.09 loss. Let's go ahead and just edit this. You know what? I have an idea. I'll be right back. Okay, so I did a little bit of work. I got to work on some maths, some numbers, crunching, the like, right? So I'm going to do this all on screen so you guys can see it. Do I have an application? Not that one. I'd like to display calculator. Why not? Let's just do that. Media. It's window capture. Yes. Calculator. Because why not? Calculator. Boom. You can see a calculator now. Yay. Say hello to the handy dandy calculator, everybody. Hello. Glad we're able to establish that. So we're looking at all of what I made within the month of March, April, and May, as well as, well, we're still in May. We're not here in June yet. June. So what I did was I went through all of my YouTube videos that I had made a trade on, win and lose, right? And stuff. I learned a little bit. Looking for... There we go. A $316.09. So let's just clear this completely. $316.09. What else did I make? Subtract 81700. That moment when your butt itches. Ugh. It's not the crack either, it's just the side. Did I go too far? 3. It was this one. Nope, not that one. Nope. I don't think I even checked that one. Let's see if I check this one. $150 on this one. This one was what I was on, so I need to go back to calculator. Plus 150. Again, we're looking for the date of March. That's what we're looking for. So this right here. 150 plus 750. Negative 285. For some reason, this one does not want to update. Let me see. This one. Plus 3537. Is this for March? This was March. 1425. Okay, so equal that. I made $5,076.76 for the month of March. I was in the green. That was a good month. I did very, very well for the month that was that. Now, for April. Let's go ahead and just jot that down, shall we? We'll do paper trading results. We'll do March 2025 equals this over here. 507676. Let's get this annotated correctly. Good. March, April 2025 equals what? Let's go ahead and find that out right quick. So we have 507676. Good. Let's go ahead and save this real quick. Good. We're gonna clear this completely. Go back to here. This is April 1st. Did not trade here. Did not trade here. Cost me 800, so negative 800. 800 minus, just cause. There, description's too long, so let's see. So plus 937.05. Okay. That was off of that one there. No trade. Lesson learned. Lost 3.5. So 3 point. No. 3500 minus 4. No. Plus 300. Believe I did stuff with that one, but the thing's too long. 1 second. Back out of you. Nope. Okay. Nope. Reapplying the building blocks. Nope. Okay. Is this still April? Yes, it is. Plus 2600 minus 800 minus 1400. I got tired of losing money, so plus 3000 plus 3000 and then plus 4200. Good. No. And I got another 1200 from that. And then did not trade here. That was a bad trade. This one was. Minus 1506.41 minus 1506.41. Oh, wait. I made a mistake. We're in May now. So this 1, 2, and this one, both of these are incorrect. So we'll just 1. We'll do equal and then subtract 1, 2. There we go. So for the month of April, we made a little less than we did in March. So April, we made 3,500. Plus monies 353705. That's what we made for April. May 2025. March, April, May. So this is currently where we are at. We have been positive for 2 months now. We've been positive for 2 months, which is crazy to me. Large span time-wise, that's big. That's not the goal I'd like to see, though. I have to somehow manage to make $10,000. That looks like this, right? That's 10K plus every month for 3 months. I have to figure out how to make that much for 3 months. I have to stay positive 3 months. I am positive. I'm not where I want to be at the moment. I have made progress. I can in fact say that I am a profitable trader off the 2 months I have currently been trading. I want to see better. I want to see more. Not out of greed, but out of genuine progress made, because half of the trades I took in March, I was not confident in. Half the trades in April I took, I was confident in, and still lost. I understand there are months like that where it will be on 1 month, off another, off several months, and yada yada. You get the point. I want to get to a point where I am making enough to say I can lose 10K comfortably and not have to worry about any problems occurring with bills or livelihood, or you get the point. Um, Currently it is May. May, we have made. Did we just lost a trade, didn't we? Yeah, we just lost a trade. I have yet to post it. So we made 1200, and then we lost a little bit. 1506.4. Subtract 1506.41. This is currently where we are for May. That's currently where we are. I want to end this video now and set up my. Oh wait, you can't even. Can y'all even see that? I don't think y'all can see that. Now you can. You can see it now. Oh, that's why. Hang on. Boom. So there's calculator. We're gonna bring this right down here, right? Because that's a thing. Okay, that works. So you have a calculator there, and you have Notepad here. You can see clearly here. This is our May profit. This is our April profit. This is currently our deficit in May or March. Sorry, profit in March, April, and then May here. Yeah, and there is more to be added to that number specifically. The goal is to get 3 months of positive green with 10,000 plus, right? Yeah. I'm gonna have to figure out how to get better at taking trades, because I have in fact made $10,000 in a month. I just haven't been positive $10,000. So, and that's primarily because this right here. Like, I lost almost all of this gain and was struggling to get back, and that's essentially what I did here. I got it all back, and I've started this month off pretty dang rough. I really need I need a break. I need my reassurance back that I can successfully and confidently make this again. Um, yeah, that's currently where I am with this. I'm gonna end the video now. We lost today's trade. It sucked. In fact, let's go ahead and take a look at that, because yeah, we lost today's trade. We're now this far in debt. Psych, not debt, because stuff. History? Yeah, history. This year we lost this much. 5-8, yes. 5-8. This was our. We wanted it to go up, so we bought in, and we lost to a stop out here. Right there, we lost to the stop out there. Dang, we just broke structure too. We stopped out there. We lost monies. Bought in for this. We lost to here. Kind of sucked. I'll have the updated number put into Notepad, so the next time you see this, it'll be 100%. You'll see it, and it works. So, yeah, that's the thing. With that being the case, yeah, I hope you guys enjoyed today's video. I know it wasn't super long. I know I could have done a lot better at identifying the confluences needed to actually get a decent trade today. I'll be sure to do even better. Like, I can't trade tomorrow because it's news. So we have, let me X out of this, go here, X out of this, go here. We have all of this. Oh, that was a red folder. That's why we got stopped out. That was high impact, double red folder day. That hurt. That was an orange folder at the start of this video. I'm pretty sure I included that in it. That was orange to start with. And then it turned to red and impacted us heavily. So, ouch. Tomorrow is an FOMC day. We'll look at market. We'll look at it. So the actual is supposed to hit at 11:30. That's after our trade time. So we have more hawkish than expected is good for currency. I don't know what hawkish means. I don't know what the word hawkish means. Let's look at hawkish. I'm afraid to look this up. And market, okay, market stance or monster plus this leads or the economic condition. Okay, so okay. So I'll have to go through Econ 101 all over again. I understand what hawkish means now. Translating that to what it's going to do for price, I imagine it's going to actually push price lower. If the monetary policies become even more strict than what they already are, if they become more controlled than what they already are, managed, governed, the value of the US dollar is going to go down. If they're loosened up a little bit, though, price is going to raise. Price is going to go much, much higher. So we're looking for the not the reaction, but the general mood going into 11:30 in order to determine what that folder is going to bring us. If we see price heavily swinging back and forth, we know it's not hawkish. We know it's not being super controlled, super governed. So that's what the FOMC folder is someone coming in saying, okay, we're going to govern this, 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 and this, and it might adjust price left, right, and center. So we're going to look and determine what's what and where. So with that being said, I hope you guys enjoyed today's video. Tomorrow we might take a trade. Tomorrow we might not take a trade. We're looking to take trades. We're looking to get out of this here. We want to see this go well beyond both of these totals put together. If you enjoyed it, drop a like, comment, subscribe, leave a follow. Check out Orb. Check out the Gaming Orb. Check out Orb Minus. Check out Orb's Vault. Go to Twitch link, Patreon link. Support me in any way you can. The sooner I can earn a revenue off of something, the sooner I can actually get good at editing videos and not posting 2.5 hour long TED Talks on why I suck at what I do. With that being said, I'll see you guys in the next one. Peace.